Hey guys, so today it's Friday, and yeah, I've got some news for you. I've blown my funded. Yeah, it actually happened, and I actually made 303 US dollar afterwards. So after blowing my funded, um, actually happened quite quick. I did not expect it that I would lose my funded account in like 3 days, especially because I'm in profit on my paper trading account in like I think uh, 2,300 or something like that. Yeah, so I think it's definitely was like a huge, um, or like a huge point goes to psychology. So definitely something I learned new with trading a Eval account. I did not expect that it would just still make such a huge difference. Trading like on a yeah, like not on paper, but yesterday. So let's break down today's trading day. Still learned something new and actually took still quite good trades today. So two quality trades. The problem was just I was already over leveraging and over trading before that. So we had also NFP today at 8:30 and also 10 a.m. high impact news today. And yeah, I was trading before them. You will see in a second what I mean. But first, let's analyze the daily chart. So what we got right here is still, I'm looking at the quadrants of the bearish fair gap right here on the daily chart. We are trading back into it, and yeah, we are still basically rejecting it, as you can see we did on Wednesday. So we traded lower yesterday. We traded only barely into the wick of Tuesday's daily wick. And from then we traded higher, and today we also only traded to consequent encroachment of the high time frame gap right here, and now we are trading higher. So yeah, kind of not really a clear bias on the daily chart, I have to admit. So we are still stuck between basically or within the range right here. We could not really form any clear bias so far, but yeah, we will see. So let's drop to a 15-minute chart. That's basically what we need apart from daily. So what we have right here is we have actually quite clean session liquidity. We have Asia lows right here, London lows right here, and New York open kill zone lows. And we can see that we still have basically the yeah, huge sell-off basically from Thursday. And we scrapped the buy-side liquidity right here within or at 9 a.m. and we also scrapped New York open kill zone sell-side liquidity. So actually right here a market maker sell model is in play. Before we drop lower to a 1-minute chart, I want to show you regular trading hours. So that's yeah, really important to me because it's also like a approach for me like or equal to the higher time frame. What we have right here is still the new opening range gap from Tuesday, which actually is delivering still yeah, really clean and strong support for NQ, so we cannot broke lower from here. Even today we traded back into it. We failed to take out the lows. I was expecting to get scrapped already yesterday, even the lows right here. So I expected that we actually would trade back to consequent encroachment and sweep the lows right here. We failed to do that. We traded lower, swept the session liquidity, and from there we traded higher. And for me, it was definitely a target, the new open range gap right here. So consists of 30 handles. Therefore, we want to see that we reach consequent encroachment. And we failed to do that on Thursday, but today that was still a target for me. So now we can go back to NQ and drop to a 1-minute chart. So basically now we have also like, oh, let's drop to a 15-minute chart. Right here you can see the new open range gap, and now we drop to a 1-minute chart, and right here you can see that we are definitely respecting consequent encroachment, and also therefore the lower quad or the upper quadrant, how you define it, and also the upper quadrant. So that's basically the reason why the opening range gap right here is a target, and we have also like the buy-side liquidity right here, which you will see on electronic trading hours, so right here, and therefore that was a partial for me. But first I want to break down, or actually I can show you my executions. Unfortunately, you only see my executions I took on my paper trading account because yeah, my Trade-O-Wait account, so my Eval, which I traded via Trade-O-Wait, is already yeah, just closed. I can't really see my executions, but I still actually know them. So we opened actually right here. So we dropped lower and already scrapped the London lows and New York Open kills on sell-side liquidity. To me, that was a bit unfortunate because coming into the day, I really like the sell-side liquidity, and with already trading lower, basically before the opening, kind of now I had a neutral bias and I did not really know where the market was drawn to. And that's why I also like overtraded, because I had no clear bias. What was I still looking for? I was still looking for Asia lows. Why? Because we are in close proximity to it. To me, that's engineered sell-side liquidity right here. And yeah, really looked heavy actually, also because we swapped already the buy side liquidity. So a market maker sell model right here is in play. To me, the 930 opening trading higher basically also right here is manipulation, and I want to see that we break down to the downside, sweeping Asia highs, and then a market maker buy model is in play if we want to trade higher, or we even trade lower to the opening range gap, which I was expecting already on Thursday. So that's basically the two options. Either we drop completely lower to the new opening range gap from Thursday, or we sweep the Asia lows and then form a market maker buy model and trade higher into the new opening range gap of yesterday. So the actual new opening range gap from yesterday, and eventually even into the daily wick, which you can see right here. So we trade back to the opening price. So what did I basically trade on my Eval account? On my Eval account, I shorted right here with forming the S&T already at 940, 951. So before the 10 a.m. news, and that was definitely the huge mistake I made today, and also what I learned new. I cannot trade before 10 a.m. news, especially 10 a.m. high impact news, especially if we have no clear bias, and if there was, more importantly, no short-term run stops. So I shorted right here. I want to see that we break down. I got stopped. I went long, I think, of the candle. I don't know. I just overtraded. I thought we basically now invalidated the setup. Still, because if you drop to a 5-minute chart, you can see that we have yeah, really just build up liquidity on both sides. So on the sell side, you can see we have equal stacked up lows, and also on the buy side, you can see we have yeah, made lower highs. So really clean, equal, not equal, but really stacked up highs and lows. Therefore, right here we have no clear bias, and therefore we have to wait for a short-term run on stops, as we saw right here, and then we know where the market is drawing to, and then we are more yeah, we have higher probabilities to take a trade. Yeah, so I shorted right here, got stopped, went long, got stopped. I think I went long once again, got stopped. So I think I took 3 trades or even 4 trades, which did not play out. And yeah, I just lost it actually in that case. I overleveraged as well, so I overtraded and overleveraged because I did not really see how huge my loss would be. So that's actually kind of a bit of a mistake. So I will definitely in the future definitely stick only to 2 contracts. If I ever trade, I definitely will ever trade, probably on a funded account again. But yeah, I will definitely stick to 2 contracts, and I will not trade before 10 a.m. news, especially if we did not had a short-term run on stops, and if there's no clear objective, obviously. So now back to the executions I took on my paper trading account. You can see right here. So what was I looking for? Still looking basically now for the Asia lows. Why? Because we had a really clean short-term run on stops with the 10 a.m. news. So that's manipulation higher. And therefore some people are chasing basically the candle which trades higher, but even closed lower right here. So that's definitely a fake out. So manipulation. I went short right here and got stopped right here. So the right approach would have been that I put my stop above the short-term run on stops, so above the swing high right here of the 10 a.m. candle. Still, yeah, it's kind of a mistake. Yeah, it's definitely a mistake. So, I mean, if I get stopped right here or right here, it's not really such a huge difference, and in that case it's just more yeah, it's just better. So it's more likely that we will not get stopped. Still, I was convinced that we will draw basically lower. When once again short right here after we broke below the low, and took my first partial right here, basically at the sales liquidity of the down close candle right here, and took my, or got stopped right here. I had my take profit right here at the CE level of the high time frame gap, but I got not filled, unfortunately. Yeah, but that's just part of it. So should have basically put it maybe 1 or 2 ticks higher. That's just it. I was really, so right here I had, I think, in profit $200. I really wanted that, and I did not want it to have like 198 or something. So that was definitely a mistake. I cannot really yeah, place my take profit due to price action, due to my P&L. I have to do it based on my price action, yeah, as I already mentioned. So then we rallied up, and that kind of looks like a manipulation move, because we so that's not a low resistance liquidity run. That's actually a aggressive displacement to the upside, which is really inefficient and likely to fail. So why did I still enter right here? Because if you look to the left, we have also the same delivery to the downside. Therefore, this level is balanced. And we also spend lots of time in here trading back and forth. Therefore, we have really yeah, much time spent in here balancing the prices. Therefore, we expect now that we will definitely draw to the upside. And more importantly, if we draw also, or drop also to a 5-minute chart, you can see it's, yeah, way cleaner. So we have like 3 consecutive down close candles. It's one big order block closed above the 830 opening price, and we don't really want to see that this candle right here trades all the way down here. So we expect that a really small portion will be left open. Therefore, we have a breakaway gap right here. I entered right here with one contract, added right here with another contract, took my first partial right here at basically the buy side liquidity of the wick right here, and then took my last partial right here at the external liquidity and also at the high of the new opening range gap. And basically my first partial right here is also at the lower quadrant of the new opening range gap from Thursday. So in that case, that's basically perfect to me. So we'll once more drop to a regular trading hours chart. So that's the new opening range gap I was referring to from Thursday. If we drop back to electronic trading hours, you can see it right here. And yeah, so definitely I could have maybe not executed by a limit order. I definitely could have executed by market and just yeah, look how much we trade higher, eventually aim for the low of the daily quadrant. But yeah, I'm really content with that. And yeah, making with that basically, as I already mentioned, $303. So that was today, minus 138 on the first loss, which could have been avoided, and then 114, 179, and 147. So 303 overall. And now I'm basically up 2,276 on this, yeah, on my paper trading account. And I think that's really insane. So I blew my Eval account in like 3 days, and it's like the completely opposite of how I traded lately. So actually, let's show. I want to show you my Notion template. So right here, you can see the previous weeks, and as you can see right here, I made this week with paper trading $512. I know it's a bit so like this week is a bit kind of off, because yeah, I have not basically included the losses I took on my Eval account, so therefore maybe we don't look at this week, so yeah, the current week. But if you just look back, I'm really profitable actually, and basically the whole month from November and also like December was really good trading. So I think I was also like really very so sorry guys, not only my trading approach, but also like my psychology. So I was definitely trading very well. So I thought it was time for me to maybe try a Eval account, but now I blew it in like 3 days. So definitely it's still something I have to learn. So obviously it's my first time try trading a Eval. It did not expect it that I would like pass my first Eval account. I think that's just not realistic. You have to first lose, and that's just why you have to. So I realized it basically today firsthand because we are just humans. We are emotional, we over leverage, and we over trade. But I'm really proud of my trading approach still today, and definitely learn today that I will avoid trading before 10 a.m. high impact news. Um, and then I will definitely stick to 2 contracts if I trade only like a $2,000 account. Yeah, I don't really know how I should go on basically with my trading, not approach, but yeah. So I think definitely I will give myself some time. I will not eventually, eventually I will buy maybe another account, but I think the whole January, maybe even February, I will trade on paper. I realized I still have to learn a lot, and I think also like that the first month of the year is like more the difficult, or it's like maybe even the most difficult month. So January is most of the time really difficult price action. Therefore, to avoid it at all with a funded account is maybe um, yeah, reasonable. Um, but yeah, I actually don't really like those funded account challenges. So I really would like to just trade a $2,000 account with a broker. So that would have been perfect, but I don't. Yeah, I don't make money. I'm yeah still in school. I've yeah lot to do with school, so I don't really have the time to also like do a job because I'm also like learning trading, which also like takes a lot of time, and I still have lots of friends which I want to meet. I want to do sports, so like also having a job would a bit too much for me. Um, Eventually, maybe I just have to accept the fact that I still not really ready for it, that I still don't should not rush the process, that I should commit to time, that I eventually will trade even live money or another funded account. But yeah, I really like my approach today with targeting the regular trading hours chart, new opening range gap, as I already mentioned before. But yeah, I think that's basically it. I will wrap it up right here. Still learned a lot, so I think every time I'm saying that I learned a lot, but it's just it. So I really learned a lot. So maybe that shows to me that I'm still like staying on paper, maybe like for a few months. So like maybe for just a bit more time. So yeah, but now yeah, we end it right here, and thank you basically for watching, and see you soon.